Ladies and gentlemen of the crypto space, we're live on a Friday, January 31st at 11:34 a.m. Let's start with our poem. This poem is pretty decent. I like this. I'm trying over the years to simplify how I get our streams off the ground. Obviously, I think I'm picking. And so just focusing on a simplified description of a sentiment, an observation that I have about the market. So, as very common, it's the dollar, because the dollar drives the entire global financial system. Therefore, it drives the crypto markets and the dollar. And the dollar is most easily inspected vis-a-vis the DXY. So DXY climbs, yet crypto stays, flows slow, but not decays. Vol remains, yet trends hold tight. Steady hands still play it right. Dollar. So it's quite interesting today, looking at technicals. Um, this 108 level is quite astounding. This is a level that causes significant financial distress globally. Significant. We're talking about direct inflation in foreign nations. As the dollar goes up, inflation goes up, literally to the 10. If you have a 5% increase in the dollar, you have a 5% increase in inflation in relative currency valuation consideration. And that's painful. We literally have inflation effects that occur day to day and overnight. We operate in the world of dollars here in the United States, so it's a bit of a different inflation expectation, consumer price inflation standpoint. You're talking about operating in a world of not yen, so on and so forth. Right, inflation. Um, but the DXY seems to be, from a relatively short-term time perspective, daily chart, at least expressing resistance on the time weighted average price. That's comforting. That doesn't mean much. It's not too constructive. It's perfectly constructive, because we surely expressed resistance back here in December 24th, a month ago. Uh, for a 3-day period was rejection, a nice breakdown with a bearish engulfing. This is such a fake out. Such a such a hard, yeah, giant bearish engulfing, invalidating 1, 2, 3, 4, even 5 days instead of the close. Just boom right to the upside, all the way from 105 to 110. Painful, painful run of the dollar. Completely accounts for all the market activity we've seen thus far between late December and so we're wrapping time with average price on the daily chart yet again. In the backdrop of 100, 200 SMA cross. Zoom out for perspective. From a weekly standpoint, it was bounced right off the time with average price. So, as you can see from daily inspection, it's premature to really say anything with a great deal of confidence until you have some weekly candles. But oh, it's all the time by average price. See a close between the time and weekly. That basically is an comparable expression as to what we experienced in our two rallies in 2024. Pretty simple inspection. Break below the time of average price, you're going to have a nice rally. And you obviously zoom out and you get your increasing duration part of the cycle, because we are not there yet. Notice there's no companies out. Companies from a weekly perspective. So monthly chart, much. This is such an elevated price. Want to get below. Dare I talk about this one? Is it possible? I mean, most macro still looking at the 100 line as being that important psychological barrier. So I would say that's probably between here, 50 SMA and 100 SMA, 100 to 98. You start to break below this 98, you're going to have out. level. And my general sentiment is that is validate. I don't have a time preference on that occurring, but it's important to understand why the markets behave the way they do. When you understand these mechanics, you're like, that markets are relatively hearing, relatively strong in the backdrop of the dollar at this level is actually comforting because this is where you start to see significant distress in markets, not where markets are. I mean, look at 10-year yields. You're at 108 and 10-year yields are flat on the day and moves at 90. If you have 10-year yields flat on the day like this, you're like, the world's over. And the world looks at oh, looking at the move indicator directly, or they're looking at the components of the move indicator. And that's what drives the global economy. These very simple inspections. We look at the high level pieces of data of this perspective on market. More sophisticated actors look at the nuances, the subtleties of what constitute these high level inspections. That's what they act on. We get a forward-looking glimpse. We get a little insight into how they operate and why they operate the way they do. But it's high level. And now it's kind of the point of the poem. Yet also right, considering the dollar as being strong, all remains. Yet trends hold tight. Let's look at the trend from a DXY perspective on a 6 month chart. Trend. So notice these trends are occurring over a year period. It gives you this great. That's an expression of how important a different perspective or perspective on a multi-year period. I mean, basically between 2022 and current 25 size of an overall massive systemic flow of capital for years. And what this chart says from a 6 month perspective is we're on the verge of a structural change in economic reality of the planet. And even from a 6 month perspective, even back in 1984 and .com, we didn't have a structure like this. Massive, monumental quick in 2022. A second run in 2025. Good. 2H 2024, second half of 24 bleeding into 25. And then it rolls over. That's a 3 year topping. This was clearly significant intervention. Plaza, of course, back in 85, .com intervention back in 2001. This is different. This is a whole other beast. It's much lower than what occurred at .com and significantly lower than what occurred back in 85. This is math, and that is the biggest takeaway. Aside from everyone looking for a cycle, they're like, when is top? Is there a cycle? The backdrop is it's different, and it's not like I hope it's different. This is objective observation that this plays out is different secularly. So let me explain the difference between secular and cyclical. If the dollar's here and it goes down, it's up, that's a cycle. The top's there, it's down again. It's another cycle. It's another cycle. Okay, I'm sure this is illustrative. Take much from it. Here's secular trend. Highs and lower. Is obviously because that pulls us into 2034 at 87, and many suspect, at least according to the lower voters and the overall structure of this chart, the direction that is much more angled. Secular trend makes sense considering recent government debt activity over the last couple of years, 3 years, let's say, way yields have been behaving, with the level, some at the US level, as well as the global level, but also with regard to the reality of what the hell the dollar is, and that the dollar must come down, and that the dollar cannot go up because the world cannot tolerate it, meaning it cannot sustain it, execute and operate and continue to exist if the dollar's directionality continues. Administration, I'm sure, knows this. I'm sure regulators, and I'm sure that they execute policy to accommodate the global demand for dollars to allow space order to continue over a period of time. 10 years, however long the US could sustain higher lows and higher highs on interest rates. 10 years, discussed yesterday, total validation of trend. And when we're talking about a validation of trend, we're talking about interest rate trends in 1981. This is a reversal. This is a directionality reversal. Sitting at 100 SMA from a structural perspective, and I don't incidences. I don't think there's too much significance in the average necessarily. If people are trading yields, that doesn't make any sense. They- Trading total return, so on and so forth. But this is clearly an expression of a resistance level on 10-year yield interest rates, 10-year interest rates. You've got a 10 SMA crossing 50 SMA on the 6-month chart. Uh, Count volatility here. You don't need to. So wait, which is the resistance level. Trends continue until capitulation when breadth collapses. Meaning if you're not going up, up, and up, you likely reverse cyclical. So the question becomes, where's the cyclical line? Turns out the 50 SMA is about three and a quarter. Okay. So let's say over the next 2 years, you get down to three and a quarter. That's a pretty high interest rate compared to last, what, last 17 years, 2008. If you get down to three and a half by 2027, you're talking about these mega cycles over long periods of time, which constitute secular trends. That if the yields and the interest rates are coming down on long-term debt down to three and a quarter, component of why the dollar devalued, down much more than that. It's a spoken administration. But what we look to when we find confluence is the structure here. Structure, this has reached a boundary, which is a degree of capitulation and directionality. Capitulation, trends continue until capitulation, then they stop. So when you see confluence, like 2 years of interaction with the 200 SMA and 6 month on the 10-year yields, and then you see this interaction as well, basically 2 years of interaction with the 107.35 line, you start to have a greater degree of confluence saying, all right, it's been 2.5, 3 years. It's time for a cyclical reversal. And everyone always argues the markets are forward looking. Everyone is doing right now from an equity market standpoint, especially standpoint. Folks need to realize Bitcoin is at $105,000. The ETFs launched at $47,000, followed by immediate retrace to $40,000, and we're up $105,000. These numbers are insane. The market is looking through everything. Inflation data, Fed funds, overnight rates, and even relatively elevated 10-year yield compared to Fed funds rate. Um, it's even looking through the value of the dollar. And because the markets continue. Go back to the poem. Dollar strong, yet all's all right. Vol remains, yet trends hold tight. The market is looking to the trends, it's seeing through the noise, volatility. Stands. The only way this party continues party, I mean continuity of financial systems, actual sovereign nations. Theory of outperforming Bitcoin. Look at that ETC. Dare we look at the chart? Dare we look at ETC? It's painful to look at. So a little bit more comfort in. Let's go with short term. This 100 SMA looks too big as resistance. Should be bigger. Resistance. Obviously, you push above it. That's the whole thing. Zoom out to a 3-month chart. Or let's see. Which we can see a wick through that monthly 100 SMA. And that's basically what it is. Either it's flipping at us, or it's really a consolidation on. It's not encouraging. The 100 SMA continues its downtrend unless there's breath above the 100 SMA to pull up the average. It's implicit expression of weakness until you have the higher high. This is 1 and 2 of the trifecta of bullish confidence. The breakout, fine. The retest, if you consider November the retest and the breakdown, but you still need that higher high to trifecta. If you don't get it, it's weak. Falls back down. Turns out that was its high. Site. Audience taking it. Oh, toast. Not bad. 10 minutes into the stream, and I'm just checking the audio. Hold on. That looks good. Check. No, check. 1, 2. Okay. Now it's better. Toast. Okay, no, that should be better. Okay, it is what it is. If all your content is audio related, if you're on X or on YouTube, please feel welcome to add additional any questions you may have about the markets. More than happy to discuss any ongoing. Always audio. Great. I got nothing I could do with these. It looks right to me. Checking one more time. Sound. Check. Check. Cutting out. I don't know. It sounds good. Not that I could confirm from your end, but all my instruments say the sound bars. I think looks pretty good. It's not- Check. Oh shit. Oh my god. All right. Fine. You guys win. That certainly was a webcam mic. Okay. If you're on X or on YouTube, please feel welcome to ask any comments and rewind to the beginning of the stream and do a transcript or something, or put on a focus and try and hear, because that was a pretty good introduction. Quite unfortunate. So many damn audio sources on this computer. I literally have to check 3 things to make sure that the correct audio is going towards the stream. Anywho, that definitely was webcam mic. Yeah, of course it's better and stuff because I selected the headset instead of the webcam mic.
Arrow, I want to consolidate one of my positions into others that produce metrics-based cash flow, but not sure where to put the dollars. Do you think just splitting up dollars across the board to all is rational? Well, diversification leads to increased resiliency. Diversification also diminishes the potential for a particular position to outperform. I'm quite fond of concentrated positions, and I have one position that's overwhelmingly concentrated, a second position that's oversized but significantly smaller than the overly concentrated position, and then the rest are what I consider minor positions but effectively sized. Effectively sized means you have to determine what is an effective size for a position. Now, that is a subjective determination, but let's say my effective position, 2.5%, 2.5% position sizes is what I've been doing probably for the last year as an effective size for the position, for a position, a small size position. Um, I don't really have many of those 1% to 10% anymore that I used to talk about because I'm not into capital gains. So literally 1% to 10% is an expression of capital gains. It's going 10x on the money. And that is something that I've grown not fond of anymore. It's not something I'm too interested in. So that methodology has slowly evaporated from my toolbox. 1% to 10%. That's something I said for a long time, but that's no longer something I really think about much anymore. Think in terms of effective position size. Now, if you have a smaller position, something that's an effective position size, which I just stated was around 2.5% for myself, if it's depreciated over the last month, all right, fine. That's where you can potentially bolster allocation. That's something I did with Tango, which depreciated a bit, and I bolstered it up to effective position size. I originally sized it a little less than effective position size, probably around 3.8, 4%. I'm sorry, 1.9 to 2%, and I bumped it up to 2.5%. Recent liquidity exposure was about 2.5%, and I don't feel the need to bump it up considering available cash. Albeit I do have available cash to bring it back to the 2.5% level. So not something on my mind right now. You have to always weigh your available cash in terms of its required position size. You need to have an effective cash position size. And the point is for that to grow. That's the whole point of all this. The whole point of trading, the whole point of investing for cash flow is to have more dollars at the end of the day. So if every second you have dollars, you're like, I got to buy something. No, that's something that needs to be cured. Just because you have cash doesn't mean you have to buy something. It means you sit on it and grow it week after week after week. And then if you have, I mean, a minimum, you need, that's why you need to think in terms of effective position size. Do you have available cash to achieve an effective position size? And just because something depreciates doesn't mean you need to deploy capital to bring it back to an effective position size. Very important for folks to acclimate to the reality that you don't need to spend. Maybe that is a reasonable statement. There is a great addiction to spending. Cash is important to have. Um, everyone, audio's fixed, audio's fixed, audio's fixed. Good morning, everyone. I'm not going to say hello to everyone that mentioned the audio. Asun, good morning, Cap. Thank you very much. Appreciate you. Welcome. If anyone has any comments or questions, please feel welcome to ask. More than happy to talk about anything. Spell was up at 0.0018. That was a wild week. That also resulted in a massive outperformance of the ECRV vote rentals for the week, which was nice to see. As we continuously talk about, revenue goes down, you have some austerity. Revenue goes up, you have some prosperity. Last week was a week of prosperity where there was a significant week over week increase in vote rentals. Now the inspection comes back to let's see what happens this week. It's Friday, so we won't see vote rentals go up probably until maybe over the weekend, but Monday. Seems like a fair amount's been posted. Let's see. Let's look over here. All right, so A was still up there. I look forward to Abracadabra coming back in. As much as these are nice numbers, just seeing them over 0.001 again, we didn't see that for 2022 and 2023. Took a while to get back to 0.001. Um, but the amount of size for these I much appreciate and primarily just focus on Abracadabra. I mean, these are nice numbers. 22 is a nice chip, so you could have a decent allocation there and get compensated pretty well. 0.0017 is a relatively elevated number in historic terms. Is that the full sort? I don't know. I don't want to load that. Nice numbers though for decent sized portfolios, 4, 500. So you're talking about 25 at the most, 14%, 10% to 25%. That's pretty cool to see. But it's Friday, so you have to check back on Monday to see the full swath of vote rentals that come in for the week. Anywho, 2 cents and Kingdom. Man, Nile, what the hell's going on with Nile? Absolutely loving Nile. What's going on? Vote rentals on Nile have been through the roof, and Clio as well has been performing very well. And ironically, or unfortunately, Ramses has been lagging these child kingdom protocols on relatively microscopic chains of Linnea and Mantle. It is what it is. Um, but that's just the observation over the last at least 2, 3 weeks. I mean, these numbers on Nile have been extraordinary. I like to go over to Icky and support the Nile token, in which case Nile F cranking out 31.95 for the week is quite nice to see. Hopefully, though, these weeks continue. Definitely not something to complain about what I'm seeing over there. Did I mention I exited the Aura position? That is a rare modification to existing exposure. I have very strong documentation that says not to exit positions, but there's a 3-month lock on it. One, I'm not fond of 3-month locks. I prefer perpetuities. So the fact that there's a 3-month lock accompanied with the underperformance, accompanied with all the other shit that comes along with the fact that it's not base layer, it's a derivative, warranted uh, liquidation. And that's okay. That is part of my procedures, not something that's too unexpected. Uh, Balancer is fully retained. That is much more palatable 1-year lock, and it is reasonably productive. Is that a great irony? Folks don't talk about Balancer much, but there's a relatively constant stream of rewards for Balancer. I mean, week over week over week, it literally just pays week in, week out. You go over to Hidden Hand on Balancer, it's actually quite nice. It's not something I've complained about. It's paid pretty consistently for years now. Um, by 10K votes, you're talking about a pretty big laundry list of vote rentals just across the board of decent sized money, 1,000, 2,000, hundreds. I mean, that's there. That's interesting. With these small numbers, relatively small numbers, what that means is the whales don't really vote. The big guys, the guys that claim and it's like a $30,000 week because they don't give a shit about a $200 week, a $500 week. So they just sleep on it because it's not a large number to them, which does leave a lot of vote rental opportunity for small to medium sized actors. And that is something that I appreciate. It's not the largest position. Relative to my effective position size, this is probably about half. This is maybe like 1.8% allocation and has been doing decently. I don't even have a chart of it, but week in, week out, it is a very consistent pair. Same can be said about Aura, aside from the things that I don't appreciate about derivatives of base layer, vote rental, or liquidity incentive regimes, which is what voter escrow and VE33 are. liquidity incentive regimes. Anywho, what's going on in the micro stuff? Shadow killing it on Sonic. Volatility over there is wild. Pharaoh, big narrative with Avalanche. It's the same narrative folks have talked about with regard to Aerodrome and Base. On all the chains, it makes sense to have a liquidity financier uh, as a subsidiary, quote unquote, owned and operated by the chain itself, which is literally what Coinbase does with Base, which is what we saw a little bit of consensus doing with Nile, and would be interesting if Avalanche did with Pharaoh. And this is all prior to like a VE33, which has velodrome aerodrome type dynamics and execution. So probably one of the larger things that I'm interested in is V3 of the kingdom, which clearly goes out the entire scope of the kingdom with regard to protocols. Aside from that, obviously, DeFi money is still on the radar, but that is not a productive allocation. It certainly fits into the category of a speculative allocation, but it's not an expensive allocation because there is no expense. The exposure optimally remains as dollar liabilities. So the highest paying LP deposit is CRV USD. Go figure. You go over to earn, and you see it right here with a little fire next to it, which is pretty straightforward. So when deploying liquidity to the fire, you get the largest multiplier on points. So with the growth of it to a degree, can you say it's growth? But they've surely gotten money under control. I mean, it is literally $1 with Spectra integration and the couple of other integrations they've done over the last weeks. The price of money is spot on, which is very nice. This is a condition that should encourage total money minted to go up. So obviously, with the introduction of tokenomics at some point, you can incentivize money creation process with the money creation process. So that's pro- now that they finally got the demand side of the equation. Now they need to focus on the expanse or the growth side of the equation, and that's exactly what a tokenomics model would facilitate. So this is nicely stabilized, very consistent with my expectations, perfectly consistent with what we expected, given it's a CRV USD product, not even a derivative thereof, just basically a CRV USD product with the ERC20 modified with the OFT standard. So this is right in the center of my attention. What else can be more interesting? How much is deposited? One. Ironically, I think I have 10% of the damn liquidity pools, which also implies I'm possibly the largest, if not one of the largest, points holders. I'm hopeful for this. I haven't had one of those big wins since 2020, 2021, and it would be nice to have a big win. At one point, Thana was wild because that was a micro allocation that literally grew into a right size position. At one point, that was like 14x on the money just after Binance launch. And it's obviously depreciated significantly since then. It's mostly decent on cash flow, but it's nice to see a baby position grow into a right size position. And a right size position doesn't mean you turn in $100 into $1 million. It means you turn in 1% uh, to 2.5%, 3%. It was kind of consistent with that 1% to 10% mentality. So maybe that's the wrong inspection for me to make. Um, but it is something to observe. We could take a peek for the fun of it and see some numbers. Folks like numbers. All right, $100 a week. Considering the size I allocated, $100 a week, $400 a month. All right, I got nothing to complain about there. $400 a month. You talking, 30, 40, 50% APR, 2 to 3 year ROI. 2 to 3 year ROI. Folks would quickly see this as an underperforming position or a position that's disappointing, but a 2 to 3 year ROI is insane in traditional finance. It doesn't exist. There's no such thing. 2 to 3 years. Absolutely wild, unless it's fixed rate debt or something. It's like a lease or a finance for a 3 year term. Nobody gets repaid in 3 years, let alone two. Anywho, A was on fire. This is just a lovely bridge implementation. This thing is absolutely warp speed. Warp speed. I just come from 2021 era when bridging was getting exploited by multi-chain, and this is just a beautiful implementation that just it's not even cross-chain because you could take um, the trade function and you could swap from USDC to other I thought there was more options. Let's clear this. We want to swap from, let's say, mainnet USDC to Sonic. That's pretty cool. X curve. Nice integration. All right. This is Sonic is a little focused on their LPs, which is actually pretty cool. Got LP built in right there. Let's see Arbitrum if he had ETH. Okay, that's cool. I like when you can do things like this because that is very useful, and that's a cross-chain swap, not just cross-chain, where you're moving liquidity from one chain to the other. So this is just such a refreshing user interface. I believe there's a degree of that expressed on um, Stargate. Let's see if we could go to ETH. Now you see, look, Arbitrum to Optimism is USD to USDC. Let's see, Arbitrum to mainnet. See, it's the same. You can only go USDC to USDC. So it doesn't integrate that robust cross-chain swap type of thing we would hope where cross-chain evolves to. And that's something that Rubik solved a while back. I don't use them too much because it's a little bit more pricey, but it certainly does things like that. You go from Arbitrum USDC to Optimism. I mean, just sky's the limit. So let's pick something interesting. CBS. That's so cool. That's so cool. I get a kick out of that. You go from one chain to another chain in a different denomination, all wrapped into a single transaction. So looking at stuff like this, I'm just like, oh my God, where we are. So excited for the market. Anywho, let's answer a couple comments. Throw some comments, keep the party going. Otherwise, I'll cut the stream short on a Friday. I don't mean to keep you guys too long. Arrow are putting your X shadow in auto compounding version. No, I take the cash flow, albeit a lot of the emissions obviously have the rebase, which is denominated in X shadow. I'm not exiting that, so I just compound that. And a lot of the emissions also are in shadow, and I think I exit that. I think that makes sense. There's taking the completely rational approach to it. It makes no sense to take a haircut on X shadow. Literally take a 50% haircut for what? So I don't do that. For shadow, oh sure. All right, spot price, great. So that's the rationale there. So in this is just one of the most insane gifts, all things considered. Um, I have a decent alignment with its behavior so far. It was a free exposure. It's all locked in perpetuity. Um, Hopefully they have a burn to earn function along with VE33 and Kingdom V3 upgrade. And the amount of cash flow it's been paying is quite extraordinary considering it was free. Dare I ask, dare I ask if this is what the Nuri drop is producing? If you're getting like 400 or 500 bucks a week on a Nuri drop, Jesus. There's just one rule, ladies and gentlemen, one rule that I myself made the mistake of with regard to a couple of Kingdom airdrops is when is weekly. Every damn week, you better make sure you claim your rebase and you go to manage and you click extend. You have any exposure to the Kingdom, rebase claim, extend. Aye, that was critical for the shadow drop. I mean, it was literally a requirement for the shadow drop. Food for thought. Thomas, the bridge for Sonic was just USDC like a week ago. On AWA, the fact that there's a bridge to Sonic, I'm 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 flabbergasted where you could bridge to. I just don't have any words for it. It's so insane. Modes in here, and if you between cross curve, between Stargate, between across, and between layer swap, you have even Solana. Layer swap has Solana. So you could literally go anywhere. Solana, and no, I don't want to go there. And okay, here, Ethereum mainnet, USDC, and it should take a fair amount. Let's see. Look at that's insane. I mean, it's a big 18-minute swap time, but I mean that's like CCIP. I don't know if you haven't used Vote Market. The Vote Market, the rentals are an Arbitrum, and you have to bridge back to mainnet for claim purposes. Um, and it uses CCIP, Chainlink's product, and it is literally 20 minutes. And that is the most frustrating fucking 20 minutes that I have in my week. So 18 minutes is not the destination. That's like, all right, we gotta work on that shit. So that's why when I use products like AWA and it's literally 30 seconds from optimism to arbitrum and mode to optimism to mainnet, and we're talking like less than a minute for a complete swap, and even Stargate is pretty damn efficient. Um, 20 minutes is disappointing, to say the least. So I'm not enthralled by the behavior and functionality of CCIP. Um, that just is what it is. It's not even comparable. We're talking about a 90%. It is 900%. Takes 900% longer to execute a cross-chain transaction using CCIP than the prime competition. That's not the same ballpark. So it's nice to see Sonic in there. I hear Andre's looking for an accredited investor capital raise in the US. All right, great. So deploy that shit on Sonic. Get the party started on Sonic. We have a capacity to transfer capital to and from Sonic. Shadow's going to do very nice because we have exposure to Sonic. Okay, winning. Yes, that's it. Simple as that. Arrow. No, this was better than Neri. This. Okay. When V3? When V3? Probably all I can say. And I farmed that thing hard. He farmed it hard, and the drop was it's because of scroll. I just from the beginning it was Linnea and scroll. Those are your ZKs. And Linnea consensus. So scroll maybe was deployed a lot earlier. They clearly screwed the pooch on their drop. Um, Linnea's from consensus, and consensus is Ethereum. So I don't know. That was just my sentiment on that. I didn't really want to think too much about that decision. So it made sense that Linnea would be more interesting. Now, obviously, in hindsight, that has worked out well, but that was the rationale of why. I remember when we were buying that Linnea position. I think I bought Cleopatra also that day. I should have just bought all Linnea. That is what it is. That was a fun day. Thomas, yeah, on AWA. Yeah, this is a mid-5 fake position, which is why, yeah, it's locked. It's a perpetuity. You know how the captain loves his perpetuities, and it just pays on a weekly basis. Lovely. Thomas, what do you think about curve for DeFi money points per dollar gives a lot more points? If you were going to build your DeFi salary coin position today, what would your basket of coins breakdown be? The hardest thing really is I obviously think quite a great deal about folks getting in to markets. The hardest thing is the emotional processing. If I answered a question like that, it's like, all right, my portfolio, because I chose my portfolio for a reason. But it is easier said than done to navigate the reality of volatility. It's it's not about ignoring the emotional reality of volatility. How do you not mitigate it, or how do you digest it and process it? And that is by understanding it. The only correct answer is that comes with time in the market. So it's not for me to say, how would I build it? It's like that constitutes a recommendation. Only reasonable thing I could say is, why do I do what I do? How do I think about what I do? What is the decision making process that goes into what I do? And everyone has to make their own choice. So that's why I post so much and why I really focused Agent Rational around dollar liabilities. First step is to really understand what a dollar is and understand that, fine, maybe curves cash flow at about what, 20%, 15, 20% right about now for larger exposure. That's pretty low relative to surely what Shadow's pumping out. It's low compared to everything else, Nile and even Cleopatra, even Ramses, which is underperforming like hell, but it's greater than 20%. So, but that's the most exciting exposure for myself because that's literally getting paid. It's like if I had, that's if- I don't, I chose the bold exposure, the liquidity exposure because of what bold liquidity V2 is offering. But I'm still hesitant because all the cash flow goes to basically the stability pools. So if you mint bold and you deposit it, you're getting paid by the interest rates on people that borrowed against their collateral. Like, all right, so why the hell aren't you splitting that with liquidity? Um, I guess maybe governance could adjust that, but point is today counts, and that was the choice. So I do see great value speculatively in liquidity, not right now, but obviously where the market is heading, I find it interesting. That was my choice there. 100 times more dollar liabilities in the market. Okay, fine. Liquidity V1 is going to inflate. And then you get redemptions on V2, and right. So there could be very nice cash flow there. But there's 100 or 1,000x increase in dollars in these markets, which is probably heading higher lows and higher highs up and to the right with regard to dollar liquidity depth. So I like that. Um, but it doesn't pay right now. So it doesn't really fit my qualification for XYZ. Not everything needs to be XYZ. How much does it cost? How much is it paying? How likely is it to continue to pay? There's a speculative component in markets as well. So the liquidity component, I would argue, is in the speculative bucket. Brax remains in the speculative bucket. Still quite content there. The development there is absolutely insane. Got to be the most fascinating project in all of crypto. That happens not to be that productive of cash flow. which is an unfortunate attribute, but doesn't necessarily invalidate exposure. Um, yeah, that's all I can really say, Thomas. Everyone knows what I own. I own the Curve, I own the Velodrome, and I own Kingdom. Found Tango recently interesting, Contango, and I found what else do I own? I mean, those are the big positions. Shadow is a free airdrop. I wouldn't buy that shit at this price. Um, that's the big exposure. Dana was micro, it already inflated. It was up 14x, and now it's retraced, but still, the shit is massively inflated. So the hardest part of investing is actually acquiring the investment, because once you acquire, then you're just along for the ride. Up, down, appreciate, depreciate. I mean, that's just massively inflated compared to where it was. It was at 14 cents. It's at 72 cents. Let's take a look at some analytics to give us a little context. Let's see the dollar supply on BSC for the fun of it. 7 bill on BSC. That's a massive, massive network. You compare that to Base, which everyone's hot on. Everyone's like, ooh, Base is exciting with Coinbase and Aerodrome and meme coins. Meanwhile, Base is at $4 billion. It's a relatively small network. Is a microscopic network compared to Ethereum. It is a small network compared to Binance Smart Chain. It is even smaller compared to Solana, which somehow tacked on another $1 billion worth of capital. What the hell is going on? I think people are losing their minds. They are pumped out funding themselves right in the ass. That's what they're doing. Big old jerk of everyone trying to fuck each other over. Crazy. They literally got virtuals trying to get over to Solana to get in on the fucking overaction. Crazy. 11.42 billion. That's insane. So where the hell is Sol 3 and that airdrop? Let's see if that shit comes up even close to what Shadow offered. That would be lovely exposure. I hope that helps, Thomas. I don't know if it does, aside from the colorful descriptions I offer. Um, hardest part is getting on the train. Once you're on, you're just along for the ride, according to the methodology I discuss. Whiskium Stewie. Definitely, maybe got that right. What's your opinion on Ample and Spot? It is a dollar primitive. Particular was it USDAF? Very cool product. Reminds me of ROUSD from Ripple. I'm not interested in them as exposure from an investment standpoint. They are meaningful as a primitive. It's a different type of dollar. That's interesting. Everything that Ample says and what Spot really did so well was create a novel dollar. This and guess what? Ample is created rebasing. They are the original rebase token. It's elegant. It's actually brilliant considering when they built it. So my 2 cents is sure, I very much look forward to the future of it and consuming it. I don't know how useful it is. Why? Because the entire world operates on bank liabilities, meaning dollar deposits in a bank account, which literally means and puts USDC front and center because you could drop USDC on a debit card and it's instantaneously spendable as dollars. So USDC is the payment token, payment crypto token. It is the unambiguous champion of crypto to real world payments currently. Um, unless there's a redemption model for ROUSD or there's no redemption whatsoever for USDAF or Spot or Ample. It's literally synthetic rebasing, elastic, unique dollar primitive. So it will not be useful as a payment stablecoin. You can't redeem it. You need liquidity depth with another stablecoin that's redeemable for dollar deposits at a banking institution. That's my 2 cents. I've spoken with them before. I have extremely high opinion of the product, but I often say the greatest technology isn't the greatest investment. And that is a decent example. That turned out to be the case of Frax. That's astounding technology. Astounding. I love my exposure to it. I just what's the potential for an Ample spot to pay you? So it's a dollar liability product. What you want is a credit market where you could take in blue chip collateral rather than like higher risk collateral, high volatile, long tail collateral, um, and you mint spot, and somehow there's a mechanic where it applies, you know, e- um, expresses interest on ample and spot to create the mint. So that'd be interesting. So could be uh, a layer built on top. This is all speculative. I don't like talking too speculative about what may happen. What really matters is what's happening right now, and that's how you manage capital. Anywho, um, I remind you, probably the last time I'm going to remind you, if you're on X or YouTube, if you have any questions, get it in the stream now. Otherwise, we're going to finish up soon. Andre retweeted some stuff about Shadow. I'm not bullish Sonic, but bullish for my free Shadow bag. I think Sonic's going to be very interesting. Would I buy anything that's on there right now? No, no, not really. Um, so grateful for free exposure, but that was the whole point. Didn't we discuss that? Kingdom gives you drops, and Velodrome expands to new chains. I mean, Velodrome literally, so Velodrome expanded to a lot, Mode and Metal L2, which is Metal's old school. Metal Pay, that's old school. So that's pretty interesting. So they've taken their time to get up to speeds. So the new L2 doesn't have integration into the fast bridging infrastructure. So they still just use the Pinocchio bridge. Um, but it's there. And it's a nice vote rental. It was a relatively healthy vote rental for the week. So I'm definitely not complaining. But look, this vote rental is available because of free exposure to a new chain. And as there's an additional vote rental that undilutes the pool of available capital from vote rentals. And that's awesome. And that's something that really only Velodrome could offer. The different reality for Kingdom, different reality. Aerodrome is literally in a sandbox. It's completely isolated. But Velodrome is expanding. Probably one of the most interesting exposures. That completely, totally, I don't care about the volatility. It warrants the size that I chose, and that's just the way it is. Yeah, learn from my mistake. I got no shadow. Yeah, the weekly locks. Uh, I'm sorry to hear that. Lock your Ramses on. You know what? Excuse me, 1 second. Okay, let's go here. Let's go here. Frankly, from an OPSEC standpoint, Rabby is the only product you should be using as a browser wallet. The fact that it shows you it's a signature. First off, signatures really can't have much of an impact unless it's a permit. But it's a hell of a display. Uh, Quite remarkable, actually. There's your claim, extend 4 years. Like, and you should be reviewing what you're doing. So obviously, here's your function: increase unlock time with a Ramses contract. Great. So it tells and it gives you simulation results, which is so useful. Which I actually did in code the other day when I was playing with some code over the weekend, which is pretty cool. So lock yo Ramses on the weekly basis, because that is exactly what Connect Us is talking about. Arrow 1v3. Okay, just like Tapioca and the rebrand that they just discussed on Discord, it's coming soon. I don't care when. It's okay. It's okay for good things to take time. It'll be here. I'm sure it will be satisfied when it comes. Anna said, "Hi Cap, do you find anything interesting on V4 hooks? Yeah, Bunny. That's it. I've zero. There's nothing interesting whatsoever about Uniswap, even V4. But this is Bunny. U4 here. V4 is live, so their entire new Bunny product is based on V4. Yeah, Bunny. That's the interesting thing. Nothing else. Guess what? We retain. I retain micro exposure to, which is probably deflated from the last couple of years. Meaningfully deflated, not very cash flow productive, but it's Bunny. Great. Eh, Captain's got a bit of Bunny. Look at this little bunny. Let's see. This is probably a month worth of 17. All right, so it dwindled down to nothing. You can't even claim this stuff. Contracts are rusty, which basically means they're relatively expensive to interact with, and you can't claim this stuff. You need it. I wouldn't claim that with the 10-foot. I bet you the claim is more than yeah, $27 the claim and $17. And you need a fair amount of capital to operate on mainnet. So I would like this to start doing well. I look forward to their new version. Heck, even providing liquidity, that might be interesting, which is something I basically never do. DCA Man V3, we will have the auto lock rebase like we have on Velodrome and Airdrome. That'll be nice for airdrop matters. I lock once a month and be eligible for Sonium, but not for Shadow. Once a month. I understand and appreciate that. Look forward to V3. Permalock, burn to earn, baby. DCA Man, you own Tap too. Hope they bring a new cool name and great products too. I heard they're exposed to Barachain now. Well, they're one of the first to ever talk about omni-chain fungible token implementations with regard to stablecoins. I'm certainly looking forward to a reboot. It was a relatively minor exposure back in 2021 as an early investor. That obviously was very nice at fair market value until everything collapsed, and I would look forward to that to reinflate. I'm sure it'll do well. Can't do anything about it now. Can't even buy it. So I look forward to them relaunching. Thomas, you're very welcome. I only wish I could help. Thanks, Cap. You're very welcome too. Always a pleasure. Losing money is worse than no free money. At least then start out with a rational week and turn into some degenerate like me. Never buying a new shitcoin again. Yeah. I mean, what's a new shitcoin? There's literally it's all shit on Solana. It's absolutely insane. I mean, look at these numbers. The outperformers are literally Robin. That's not Robin. It's a Robin Hood shitcoin. Bonecoin. What is this shit? It's just people jerking each other off. It's insane. Pardon the visual. Better said, it's people fucking each other over because that's what shitcoin trading is. He who gets in first and gets out with as much money as possible wins. Challenge accepted. Go. That's fucking stupid. Now, the reality is, there's much less financial activity from like a lending and borrowing standpoint, but at least that's actually a financial product and service. So dare we look at these markets as something meaningful, something that's real, an improvement upon the traditional financial system instead of shitcoin gambling? Not here to gamble. Grown ass adult that looks at the stock market. I'm like, boomer meme coins, I might as well be on Solana. Like, I want to own a company. I want to own, like Buffett says, you own stock, you own a company. Yeah, okay, no. If you own hundreds of billions of dollars worth of stock, yeah, fine. You could own a board seat and you actually own a company and get cash flow. But that doesn't exist for smaller folks. In the crypto markets, we have something, we own something, and that's big, philosophically big. Actually own something that's relatively permanent, an immutable set of contracts. It's an actual enterprise. So invest in businesses, and that takes time. Good things take time. I talk all the time about my cousins that are in their 20s, and I'm like, invest with a 10-year time horizon, not because your job sucks and you want to gamble because you don't want to fucking go to work tomorrow. That's not investing. That's a prayer and a gamble. Investing is what you do when you busted your ass in high school to get into a good college. You busted your ass in college to start a career. Your career might suck, but you're on the W 2 with a 401k and a 3% match and benefits. So you could maybe start a family 25, 26 and have health insurance. And you live modestly, you live below your means. You didn't necessarily move out to when you have a $4,000 a month income and you took on a $2,500 a month rent because now you can't invest shit. But let's say you're in your mid 20s and you have a decent career, you have extra capital, and you take extra capital and you want to deploy it and invest it. Just like the stupid 401k, which is the stupidest freaking thing in the world. I always I canceled all my 401ks years ago and I dumped the IRAs, rollover IRAs, and that was like in 2019. 'Cause those investments are stupid. I mean, literally, not like just sentiment wise, just observationally, like quantitatively, measurably stupid compared to the way we talk about these businesses and these crypto markets. These are businesses that are changed everything. Extraordinary to even discuss, which I won't digress on. Anywho, Thomas. Every day we get a chance to make different choices and read different things to change the way our brain processes the world in which we experience. DCA man, did you hear about D Trinity and his DUSD and Fractal is the only place where to get paid for borrowing stables? Cool. I'm more than happy with my base layer exposure to the Fractal ecosystem. I mean, literally, it's pretty interesting what they've done from a governance perspective, and was it One Liberty and BlackRock and stuff like that. It's just it's the type of protocol that goes big quick and just I don't know. So that's one of the most interesting exposures that I don't even look at. Doesn't really produce any capital. Just like it's just in the back pocket. You got to have a couple of in the back pocket types of exposure. And that's probably what I would define as my two in the back pocket exposures. No capital gains potential. It's the potential cash flow is considerably extraordinary. And that's Frax and Liquidity. Those are back pockets. That's the wild card. Because the other stuff is XYZ. How much does it cost? How much is it paying? How likely is it to continue to pay? Relatively simple calculation when you're talking about 100% APR on Contango. That's, you can XYZ that shit all day long when you have it's Liquidity. Oh no, don't close. Don't close Liquidity. When you have $450 million of open interest. Oh my God. It's just such a massive number. Up to 60 mil locked on Liquidity. 60K in revenues, 222% over collateralized. No liquidations, debt distribution. Interest rate is paying 15% and it's 6.15%. Well, interest rate in RF. Is there an aggregate? Okay, so the average interest rate is probably around 6% right about now. So let's say this is about 21% average yield. That's cool because some people don't deposit their bold. They use it because they're taking leverage somewhere else. So 6% average interest rate. Let's take a look at competition. Curves down at 3% and change. That's cool. So what happens is you get a blended arbitrage across markets. You get these small numbers. These are small numbers. There's less than 100 mil in these markets. Let's say there's a trail across crypto space in by 2030, and there's $1 billion here, $1 billion there, 10 billion, 50 billion here, 50 billion there, and you got 50 bill, and you're paying 6% interest, and you can arbitrage it down to 3.5 or even a week. Fair amount of savings. So that's when these markets will have increasingly stable interest rates because there's an increasing incentive to arbitrage collateral use from one market to another. So you see how now there'll be increasing demand to borrow against CRVUSD as compared to gold until the interest rates stabilize. So it all contributes to holistic normalization of a financial market over time. Lovely numbers, 85 mil here. 60. Oh, that's actually total supply of CRVUSD. How much gold is in the market? Gold supply. All right, so there's about 20 mil gold. It's nice to see off the ground. 85 mil CRVUSD, 20 mil gold. Oh man, these are freaking interesting. Lovely. I'd imagine you'd go for Ohm. Seems to be recovering. No, man, they got a treasury. As they have had a lot of capital and they built a hub of treasury. That was the whole point. That was the whole point of Ohm, Olympus Dow, build the treasury. No interest. I don't want a complex financial instrument. I want something freaking simple and something that makes sense and something that's better than a traditional financial system product. That's it. Last question for the day. Will you use your liquidity voting power to vote for yourself and make bold pools? DeFi Collective is ready for doing so. I think it's a good strategy for cash positions. No, because I'm not going to be borrowing, and I don't really want. I don't want bold exposure right now. I like the mechanic. I mean, they got the variable interest rates, which is so much better than uh, Liquidity V1. I like that it's managed. That's pretty interesting to say the least. Fixed interest rate. I don't really care about the fixed interest rate. I find it interesting that there could potentially be competition and managed interest rates. Um, and I look forward to governance votes to have part of the bold revenue rev share allocated to liquidity. I think that's a critical component. I mean, literally just take 5%. You don't have to go to 50%, 25%, just 5%. Start somewhere. Um, that's about it. What's the takeaway? Immutable. That's a big takeaway. So 2 cents there. DCA, man, you're very welcome. Much a pleasure. Friday, January 31st at 12:47 p.m. 195 people made it to the end of the stream. I appreciate each and every one of you, and together you are all a little bit more rational because of it. I wish you all a wonderful weekend. Try and keep calm. There's a lot of volatility in markets, but the time is today to really start to think about things a little bit different. Try and relax and use ChatGPT, use Claude, ask questions, and have to redefine things. What's a good takeaway for the weekend? Start writing down your rules. Write them down. Open up a docs.google.com. Talk to ChatGPT. Ask it, what kind of rules should I have about investing? Start writing down your rules and make them better over time. Work on it as a project. As you write down your rules, your brain will start to recalibrate. That's just an important process to always do. Hope that helps everybody. Be well, stay rational. Catch you after the weekend. Peace.